All right, back we go. It is Monday, March 27th. I'm looking over my clock, but it's like fading. Can't even see it. All right, so SQQQ, I did a video on that. Now look at socks. I usually don't play more than one. Usually two's my limit, but I saw SQQQ running. I looked over at socks. A lot of times, all the bearish ETFs will run at the same time. They won't run exactly the same, but I saw this. So let's look at socks. So stocks was coming down, draw your line, um, pre-market, and from it was the let me look here today. From the 24th, actually, that was Friday. And then we came down. It looks like a little like U or actually like a V recovery here. So I saw it moving up. Again, saw this move, but I was looking at SQQQ, came down. Then I saw this big cross after I flipped over to socks. And see, the bottom of a pattern, now this pattern is a very short pattern, a 5-minute chart. You have red, red, and a big cross coming back. That's a telltale sign too. It's going to reverse. Now, it's going to reverse up to here, come back, or what's it going to do exactly? Put in a nice green candle. It's a hammer back and forth. Excuse me. And you can see the 1320 EMA battling right here. And then as soon as this candle hit, I get in right here, 1825. This is a massive green bullish candle. So 1825, you can see the lines here. Today's open, today's closed, very tight. Start the right up, stacking sideways again. Now, if this came back to 1825, I would have let it run a little bit because basically it would have been even. It would have been flat on the day. Another candle came in, big green. We stacked again. It was a red candle, but didn't go down. And then we went sideways, back up to 19, came down here, and then I get out basically just under 19, was it about 1895? So that's like what, 70, about 70-cent move, and then it faded after that. Now, another reason too is whole numbers. When this was 1825, 50, 19, 19, a whole number here, 18, your quarters, 45, 50, 75. So I was looking at that too. And then I had a pretty good profit here. I think, let me see what I had here on the double. This was like 984 because this was 18. The other one was higher priced. So this was very solid. Same move almost as SQQQ, a little bit different. But this had a cross here, rode up. Now, the things too, what I go by too, when you're in, if you're in at a pretty good point, once this 13 crosses over the 20, which happened back here, pre-market, you're riding up here. And I like to see the touch. If it touches and bounces, it's very bullish. It didn't even touch, just right here on that 11 a.m. move. And then you move up even more. Then it finally came back down. So that whole move up from 10 a.m. basically to 12, it was a no sell basically there. You can scalp it, come out here in these sideways moves, but it was a very solid 70-cent gain there. So SOX is the reverse of Soxol, which is long semiconductors 3 times bullish. This is Drexion daily semiconductor bears 3 times levered inverse side. So there you have it on these. Again, like I said, these ETFs are very solid. Most days you'll get 50 cents plus that dollar, maybe more, depending on how the market volatility is, which we all know has been pretty crazy. So this has been solid. It's been working for a long time now. And let's look at the daily chart on this. So look back basically since January 22, when this thing dropped and then we started to bounce. Look at these moves. You get major moves as January, April, June, August. Look at this deep dive. That was a reverse. And when it goes down, you're flipping it. You're going to Soxel, or you can just short it, whatever you want. And then right here at 30, moved up, and then we've moved down again. Now, right now, it's stacking again. This is stacking. This is a big drop, though. This went below basically that 30 line. It was holding for a long time. So now we're at 18, 19-ish, 20. It's been going sideways since February, about 6th. So the market's been very, very much indecisive at this point. We're just in a channel. So is this going to break up and the bear's going to take control overall in the market, or the bull's going to bounce higher again. We will see. But and all these I mentioned, all the inverse and long 3 times levered ETFs, they're not really good for long-term investing. These are all trading vehicles because they're so volatile. Like, these on a bearish side, you never want to invest in bearish ETFs. These are all for trading. And the bullish side, you want to go instead of TQQQ, you want the Qs because they're less volatile. QQQ. So these are all for trading, and that's what makes it even better because they're very liquid. Look at the volume. You get 500, 600,000 in these candles. This was almost 1 million. So these are outstanding for trading, and the volatility is different than a penny stock. So you get moves down, but it's not as volatile. The violent open that always happens on pretty much any stock. But these are great levels to read. Each one. Look at this space here. That's a whole quarter. You can lower it. It's really small at that point, but you have a lot of room for your resistance level right here at 18. I mean, excuse me, your 1825 was a support resistance. So this is support your 18 level. See that cross come back? And look at these candles touch. This one touched at 18. This one touched at 18. And this was below. So see those in 1825, my stop was 18, a quarter on these. So that's it. On SOXS, we'll see what tomorrow brings. Futures right now, or plus 24 Dow Jones, S&P plus $2.50, Nasdaq plus 14.50, VIX is 22.35. So that's where we stand. All right, that's it. Please subscribe to Mike Cayman Trades on YouTube. Smash the like button, and I'll put out more of these videos. These have been running great for a long time. Just gonna do videos for a long time, but there's so many like these videos. I'm gonna try to put them out each day. If I can trade them, or if I'm trading them. That's it. Peace.